I don't predict the market. I read it. Every institutional level, every options flow, every move from smart money leaves a trace, and artificial intelligence sees it all.
Good morning, Dark Gamma community, and welcome to your pre-market analysis for June 24th, 2026. We are coming into Wednesday's session with the SP 500 printing 7,388.8 in the pre-market, sitting above yesterday's close of 7,365.46. That is a bullish gap of roughly 23 points, and right out of the gate, the tape is telling us buyers showed up overnight. The big question this morning is whether that momentum holds through the open or fades as we approach key structural levels.
Exactly, Samantha. And when we talk about structural levels, the one that jumps off the screen immediately is max pain sitting all the way up at 7,510. We are currently trading more than 120 points below that level, which means options market makers have significant gravitational pull to the upside. That alone gives this gap some credibility. It is not fighting the flow, it is moving with it. The market has room to run before it hits that ceiling.
Now let's frame the day with the expected move. Dark Gamma is modeling a range of 7,314.9 on the downside to 7,416.1 on the upside, so roughly 50 points in either direction. We are currently trading right near the upper half of that band in the pre-market, which means if bulls press this gap, we could test that upper boundary early. A rejection there would be the first sign sellers are ready to defend.
And that upper boundary at 7,416 is the level I would be watching most closely in the first hour of trading. If gamma exposure flips in that zone, dealers could shift from supporting the move to actively hedging against it. That kind of transition tends to create sharp reversals on 0 days to expiration setups. Traders playing momentum need to respect that ceiling and keep a tight eye on open interest clustering near those strikes.
Shifting to sectors, industrials are the clear leader this morning, up 0.62%, which fits a risk-on tone. On the other end, consumer staples are the laggard, down 0.97%. When defensives are getting sold and cyclicals are leading, that is a constructive backdrop for the broader tape. It tells us rotation is happening into growth and productivity themes rather than safety.
On the Magnificent Seven front, it is a mixed picture. Tesla and Nvidia are leading with gains of 0.63 and 0.48% respectively, and Alphabet is slightly green as well. But on the other side, Apple is the notable drag, down 1.17% in the pre-market, and Microsoft and Amazon are also in the red. So you have a split within the mega-cap universe, semiconductors and electric vehicles catching a bid while software and consumer tech face some pressure.
Bottom line for the Dark Gamma community this morning, the setup is cautiously bullish. We have a confirmed gap, sector rotation favoring cyclicals, and max pain well above current levels providing a tailwind. The key levels to watch are 7,416 on the upside and 7,315 on the downside. Respect those boundaries, watch how implied volatility behaves at the open, and let the market show its hand before committing to a directional trade. Stay sharp, stay disciplined. We will see you inside the analysis. On today's macro calendar, the main event is new home sales at 10:0 a.m., previous 622,000.
These releases could drive volatility at the S&P 500 open.
The Magnificent Seven are showing a split tone in pre-market, with 3 names in the green and 4 slipping into the red. The overall picture leans cautious for big tech heading into the open.
Tesla is leading the pack, up roughly 0.63% to $384.10, with Nvidia and Alphabet also holding modest gains. On the laggard side, Apple is the clear outlier, down 1.17% to $293.99, dragging sentiment in the consumer hardware space.
Microsoft, Meta, and Amazon are all drifting lower by less than 0.5% each, so nothing alarming there. But the breadth of red across the group does suggest some rotation or risk-off pressure this morning. Worth noting, the France Ebola headline is circulating, and while it's early, any health scare narrative can briefly weigh on risk appetite across sectors.
Exactly. And with Apple leading the losses, traders will be watching whether that weakness spreads further into the hardware and semiconductor names as the session approaches. The overall tone for tech is cautiously mixed, with bulls needing Tesla and Nvidia to hold their gains to keep the sector from fully tipping red.
Micron Technology dominates the after-hours session tonight with an 11.2% expected move, which is enormous given its market cap north of $1,186 billion and a beta of 3.1367. That kind of high beta semiconductor name into earnings can whipsaw the broader SP 500 tech complex hard either direction.
Agreed. And with 0 days to expiration activity likely spiking around the print, gamma exposure on Micron could amplify any move well beyond that expected range if open interest is concentrated near the at-the-money strikes. Pre-market this morning, Paychex is the cap leader at $35.1 billion with a modest 2.5% expected move, though its beta of 0.225 makes it nearly a non-event for volatility traders.
NovaGold and Daktronics are worth a quick flag as beta-rich smaller names with 4.4 and 4.7% expected moves respectively, but they are too small to move markets. Turning to tomorrow, Darden Restaurants leads the pre-market session at $24.1 billion with a low beta of 0.3078 and a contained 2.4% expected move, signaling the options market sees this as a low-drama consumer print.
TD SYNNEX and Acuity Brands round out tomorrow morning at roughly 3% expected moves each, while after-hours FedEx Freight holding at $28.1 billion carries an unusual negative beta of negative 0.3392, meaning it tends to move inverse to broader market sentiment and deserves close watching as a macro hedge signal.
The Ebola headline out of France is the one I'm watching most closely this morning because pandemic-sensitive sectors like airlines and hospitality could see sharp selling at the open even if the situation remains isolated.
Agreed. And that news landing alongside emerging market currencies erasing all of their 2026 gains tells me risk appetite was already fragile before this hit the wires.
On the SP 500, dealers are sitting on meaningful negative gamma exposure near the 5,700 level, so any downside momentum could get amplified quickly with thin pre-market liquidity.
The Lavrov commitment headline gives traders a small geopolitical cushion, but I doubt it offsets the bio-risk fear premium, and 0 days to expiration crowd will be hunting puts on open interest clusters below the 5650 strike right at the bell.
Moving to the IPO market. Making their debut today, Alpex Acquisition Corp.
An IPO is when a private company sells shares to the public for the first time. These events can be extremely volatile, especially in the first trading sessions.
Check the offer price and the available float. Day one moves can be very wide, size accordingly, and manage risk carefully. Digging into the SP 500 open interest structure, the 7,400 put sits just above spot at 7,388.8 with 8,514 contracts and a jaw-dropping 502.55% surge in open interest overnight. On the call side, 7,665 stands out with 12,785 contracts exploding over 2,030% day over day, flagging that strike as a serious overhead magnet.
That 7,400 put buildup directly above spot is hard to ignore. It likely flips between a gravitational support and a pressure point if price struggles to clear it intraday. The 7,285 put also deserves attention with nearly 5,900% open interest growth, suggesting dealers are aggressively hedging a deeper downside scenario.
With Max Payne sitting way up at 7,510, there is a significant gap between current spot and where the market maker pain point lies, which adds upward pull through expiration. The June 26th expiry shows a put-to-call ratio of 4.32 on over 600,000 contracts total, meaning protective positioning is heavily skewed and gamma exposure near spot could amplify any directional move.
Putting it together, watch 7,400 as the immediate resistance pivot given its fresh open interest surge, while 7,325 and 7,285 form a stacked support shelf below spot. A clean hold above 7,400 with any positive tape could accelerate price towards 7,665, where call open interest is densest.
Diving straight into the SP 500 0 days to expiration picture, the gamma flip at 7,346.5 is the line where dealer hedging behavior flips from stabilizing to destabilizing. Since spot is sitting at 7,388.8, we are above that level, meaning dealers are in positive gamma territory and will naturally dampen big moves.
Right, and layered above us is the call wall at 7,525, which represents the strike with the heaviest call open interest and the strongest concentration of positive gamma exposure. That level acts like a magnet, but also a ceiling, because dealers short those calls will sell into any rally approaching it to hedge their exposure.
On the downside, the put wall at 7,200 marks, where the heaviest put open interest clusters, and it tends to act as a floor because dealers long those puts will buy the underlying as price drops toward it to stay delta neutral. With spot roughly 140 handles above the gamma flip, the open should feel relatively contained unless a catalyst drives us back below 7,346.
The practical takeaway is the market has a comfortable cushion above the gamma flip, giving it a bias toward choppy, but supported price action between roughly 7,300 and 7,525 into the open. A breakback below the flip level would be the key warning sign that dealers start amplifying moves rather than fading them.
Let's move to the ICT analysis of the S&P 500 on the daily time frame. Price is at 7,365 points. We can see the market structure with swing highs and swing lows marked. The trend shows highs and lows that define the market direction.
Now let's look at the fair value gaps. These zones represent institutional imbalances, areas where price moved too quickly without covering the full range. These are points of interest where price may return before continuing its move.
We also identify the order blocks. Active ones show with greater intensity, while mitigated ones appear more faded. These blocks mark the last opposing candles before a strong directional move, zones where institutions left pending orders.
Finally, the liquidity zones. The BSL marks whereby stops accumulate, and the SSL where sell stops rest. The equilibrium line divides the range into premium and discount zones. Remember, the best long entries are in discount and short entries in premium.
Big money leaves traces. The highest liquidity concentration over 1 year sits at the 7,508 level, above current price, with maximum liquidity concentration over 7 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,508 level, above current price, with maximum liquidity concentration over 3 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,389, above the gamma flip at 7,346.
1 sigma range, 68% probability, goes from 7,315 to 7,416. 2 sigma, 95%, extends from 7,264 to 7,467.
On the GX side, call wall sits at 7,525 structural resistance. Put wall at 7,200 is where dealers become forced buyers.
The top institutional whale levels nearby are 7,399 and 7,421. These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking now from the dark gamma institutional scanner, 12 new large entries have been flagged across the options market today, and the flow is striking in both its size and its directional bias. Every single one of the new contracts detected is a call, pointing to aggressive upside positioning by institutional players. The headline entry is Tesla, with a 410 strike call expiring July 10th of 2026. Drawing $21.82 million in premium and generating 9,244 new contracts in open interest. Executed at 82.6% of ask, a hallmark of urgency in institutional flow.
That's right, Samantha. And beyond Tesla, the scanner is lighting up across multiple sectors. In financials, Citigroup appears with a 150 strike call for July 17th of 2026. 4.13 million in premium, 10,492 new open interest contracts, and a remarkable 87% of ask execution, the highest ask percentage among today's new entries. Meanwhile, in semiconductors, Qorvo draws $6.58 million at a 115 strike through August 21st of 2026, with 12,665 new open interest contracts, the largest single open interest print of the session.
And the confirmation data is equally compelling. 2 previously detected contracts are now showing open interest growth exceeding 20%, validating the original institutional thesis. NVIDIA's 205 strike call running all the way to June of 2027 has accumulated 6,610 additional contracts on top of $34.79 million in premium. The largest premium commitment tracked across both new and confirmed entries combined. Qualcomm's 270 strike call, expiring July 2nd of 2026, adds 6,878 confirmed contracts at $6.03 million. Both names keep the semiconductor and technology complex firmly at the center of this flow.
To summarize the picture from today's scanner, 12 new institutional entries detected, 100% in calls, 0 puts. Premium concentration falls heaviest on Tesla at 21.82 million and NVIDIA on the confirmed side at 34.79 million. Sector distribution skews heavily toward technology and semiconductors, with a secondary red in financials through Citigroup. SPAC-adjacent exposure also appears via SPX at a 235 strike, 10.53 million in premium, and 10,194 new open interest contracts at 67.8% of ask. The institutional positioning captured today is uniformly and decisively directional to the upside across every single name on the board.
Breaking market flow data here on Dark Gamma. Our institutional scanner has confirmed a significant options contract on NVIDIA, ticker NVIDIA. The detected position is a call option with a strike price of $205, set to expire on June 17, 2027. Open interest on this contract currently stands at 12,119 contracts, reflecting a confirmed increase of 28%, with 6,610 contracts representing new positioning.
Thank you, Samantha. Digging into the flow data, volume at the time of scanner detection was registered at 8,083 contracts. The institutional entry price, meaning the average premium paid per contract at the time this flow was captured, came in at $43.04. Total premium registered for this position is $34.8 million, placing this firmly in the category of significant institutional scale activity.
Now here is an important data point to note. The current contract price as of this report is $36.15, which sits below the institutional entry price of $43.04. In flow tracking methodology, this type of setup is referred to as an ideal tracking setup. That designation is applied when the current contract price is near or below the level at which institutional entry was recorded, while open interest remains flat or is growing. In this case, open interest holds at 12,119 contracts, satisfying both conditions of that framework.
Rounding out the data picture, the underlying break-even price for this contract at expiration is $248 per share of NVIDIA. That figure represents the price level at which the underlying stock would need to be trading at expiration on June 17, 2027, for this contract to reach break-even based on the strike and premium structure. Dark Gamma will continue monitoring open interest and price movement on this contract. Stay with us for further updates.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.